5 Fintech trends that can change the world. Hey everyone, welcome to our channel. If you're new here, welcome, and consider subscribing to my channel and click that little bell notification below. Don't get confused with the wording yet. Fintech means financial technology, and it refers to the use of technology to improve and automate financial services. This includes a wide range of applications and solutions, such as mobile banking, online lending, payment systems, and personal financial management tools. There are many trends currently shaping the fintech industry, like digital banking. With the rise of smartphones and other mobile devices, more and more people are using digital banking platforms to manage their finances. This includes everything from making payments and transferring money to tracking expenses and investments. Blockchain technology. Blockchain is a decentralized, distributed ledger technology that has the potential to revolutionize financial transactions by making them faster, cheaper, and more secure. Many fintech companies are exploring ways to use blockchain to streamline financial processes and reduce the need for intermediaries. Artificial intelligence and machine learning. Fintech companies are using AI and machine learning to improve customer service, fraud detection, and investment decisions. For example, AI can be used to analyze customer data and make personalized product recommendations or to identify unusual patterns that may indicate fraud. Financial inclusion. Fintech has the potential to expand financial access to underserved populations, such as people living in poverty or remote areas. Mobile banking and digital payment systems can make it easier for these individuals to access financial services, even if they don't have a traditional bank account. Cybersecurity. As more financial transactions are conducted online, cybersecurity is becoming a major concern for fintech companies. Fintech firms are investing in advanced security measures to protect against cyber attacks and data breaches. But those are not what I'm going to talk to you about today. Today, let me show you 5 fintech trends that can change the world. Number 1. Fintech Open APIs, Application Programming Interface. Fintech APIs are having a tremendous impact on the way that the financial industry is changing. Financial institutions now have a way to communicate with one another and their clients thanks to fintech APIs. They're also facilitating the entry of new firms into the financial services sector. Payment facilitation, client data access, and other financial services are all possible with fintech APIs. Additionally, they're frequently utilized by outside developers to produce new services and apps. There will probably be a proliferation of new financial products and services as the use of APIs increases. API usage is more popular, and this has had a big impact on the finance sector. They're now being used by banks and financial institutions to expand their service offerings and enhance consumer engagement. They're also being used by fintech companies to launch their brand new enterprises. And as more individuals learn about the possibility of these open APIs, the financial industry is probably going to experience much more innovation. Number 2. Embedded finance and alternative finance. The embedded finance ecosystem is huge and is anticipated to expand greatly this year. The embedded payment sector is predicted to expand by 40.4% annually. With embedded finance, businesses may provide comprehensive offers throughout a client's journey to boost customer happiness and profitability. Financial services including banking, credit, investing, processing payments, lending, and insurance are included. Consider an online retailer that offers insurance through a simple, convenient, and seamless client experience. Buy now, pay later is a field of embedded finance that is rapidly expanding across the board. With this method of payment, customers can place an order today and pay for their purchases later, typically in a series of payments. Alternative finance, often known as alt finance, has been around for many years, but only recently has it become more well known. The alternative finance market is currently valued at $6.62 billion and is anticipated to expand by 20% in 2023, giving it a bright future. Financial services created outside of traditional banks are referred to as alternative financing. This sector has introduced cutting-edge products and fresh ways of thinking about corporate borrowing. The non-bank providers make use of financial technology to deliver and enhance practical forms of funding in many different areas, including insurance, business loans, equity financing, and much more. Number 3. Know Your Customer or KYC guidelines. Innovative rules are required as cashless solutions see exponential growth and more financial companies enter the global market. According to Juan Alonso Villalobos, a fintech specialist and entrepreneur, next year we'll see a significant increase in the use of KYC norms. which are laws protecting financial institutions against misconduct. In 2023, new rules will probably concern cryptography and biometry, to mention a couple. The procedures that companies should take to correctly verify the identity of their consumers are outlined in KYC guidelines. These involve checking documents, such as government-issued identification or proof of address, as well as personal data, such as name, address, and date of birth. Additionally, they mandate that companies determine the risk tolerance of their clients and keep an eye out for odd conduct in their financial transactions. Number 4. Digital-only banking. The financial world is quick to take notice when a bank that only exists in the virtual world provides global payments, peer-to-peer transfers, contactless MasterCard with no transaction costs, and the opportunity to buy and sell Bitcoin, Ethereum, and other cryptocurrencies. You might remember what Revolut did. Revolut's one of the only digital banks competing for consumer space in terms of money and membership. Among the many members, it's joined by Movin, Monese, Hello Bank, First Direct, and the appropriately titled DigiBank. The advantages of digital-only banks are numerous. You don't have to spend any time visiting a physical branch, you won't have to endure long lineups, and you won't have to deal with tedious paperwork. Worldwide, both their population and earnings are increasing. Also, there is a significant factor in the projected 36% decline in bank branch visits from 2017 to 2022. Plus, using digital-only banks gives you access to snap-a-pic bill payment, handy cost management tools, rapid balance review capabilities, real-time analytics, and PIN resets from the comfort of your home. But wait before signing up for any of these fintech disruptors. Think about the fact that, like other enterprises, they have their own problems. For example, they will inevitably be the main targets of the financial scammers that stalk the internet. The fact that financial fraud is currently the most prevalent online crime in the world should have a significant impact on your choice. Number 5. Regulation crowdfunding. Regulation companies can offer securities through crowdfunding. Early adopters are swiftly becoming one of the most common sources of funding for startup founders and business owners. One of the main benefits of regulatory crowdfunding is that it relies on the backing of early investors who, in contrast to many venture capitalist investors, are much more likely to stick around, especially when the firm's going through a difficult time. With this style of crowdsourcing, companies can also raise up to $1 million from individual backers who can invest as little as $100 each. This method allows founders to raise up to $5 million while maintaining ownership of their business and skipping the typical venture capital route. Regulation to match the crowdfunding content and campaigns with the requirements and objectives of the backers and the community as a whole, crowdfunding requires effective marketing, brand-building investments, and adherence to industry marketing trends. So that's all for today's video. If you made it this far, click the subscribe button and hit the bell icon for more awesome content. Thanks for watching.